Hello students, welcome to accountancy class. I am Narsimulu, commerce teacher. In this class, I teach you the important accounting principles, and these principles also are called golden principles of accounts. Students, the accounts are classified or divided into three types. They are namely personal account, real account, nominal account. Here, if you understand these three accounts and their principles, then only you can understand the entire accounting and accounting process and accounting subject. So if you are unable to understand these three types of accounts and their principles, it is very difficult to understand the accounting process and accountancy. So it's my advice is that you must carefully understand these three types of accounts and their principles. And in the annual examination, the question will come for 5 marks, and the question may come like this: explain three types of accounts and their principles. So then you need to write all these things, whatever I am going to explain you right now. See, there are totally three types of accounts, namely personal account, real account, nominal account. So when you see this table, you can understand the meaning of personal account and principles of the meaning of all accounts and principles of the accounts. So see the first one, name of account, that is personal account. When we talk about personal account, and it tells or it is related or which is related to the names of persons and organizations. Here Ramesh is the name of a person, so it comes under personal account. SBI Bank, it is the name of the bank and it comes under a personal account. ABC Company, it is the name of the company, it comes under personal account. So whenever we see the names of the persons and organizations and institutions may come under personal account. Okay, sir. Here, and the principle of personal account is debit the receiver account, credit the giver account. So this is the very important principle, and all principles are important, but when it comes to personal account, the principle is that debit the receiver account and credit the giver account. And come to second one, that is real account, which is related to assets and money, and this account related to assets of the company and money, like example here machinery, it is the asset of the company or organization, and buildings, etc. Cash receipts, cash payments, all those things comes under a real account. Like principle of a real account is that debit what comes in, credit what goes out. Debit what comes in, credit what goes out. And similarly nominal account, it is the third and final account, and the meaning of the account is that it is related to income and expenses, or which is related to income and expenses, paid salaries, rent received, etc. Here payment of salary is an expenditure and receipt of rent is income. So all this comes under nominal account. And nominal account principle is that debit all the expenses, costs and losses, and credit all incomes, profits and gains. Dear students, you must be bayard all these three types of accounts and their principles. So why? Because the entire accounting and accountancy is built on these principles only. So my advice is that if you get the familiarity of these three types of accounts and their principles, it is easy for you to acquire more and more knowledge in accountancy, and the question will come in the annual examination for 5 marks. So I hope students you understand the three types of accounts and their principles with meaning. Thank you.